Tesla is the company that single-handedly started the electric vehicles revolution and made electric vehicles look cool and drive better than gas, petrol, and diesel cars. Most people have heard of Tesla because of Elon Musk, one of the most revolutionary entrepreneurs in the world today. He did not start the company as some people say, but he did contribute almost all of the initial funding and has since made Tesla into a global electric vehicles powerhouse. So, what does Tesla do? First and foremost, they're an electric vehicle manufacturer, but they also provide energy generation and storage products like the Tesla Powerwall or the solar roof. Let's look at the EV business first. Their most produced models are Model 3 and Y, and in 2020, roughly 510,000 of them were produced, whereas in the first quarter of 2021, the number was 180,000, or a 76% year-on-year increase. The number of deliveries per quarter has also steadily increased for the two models, from roughly 89,000 in the first quarter of 2020 to 185,000 in the first quarter of 2021, literally doubling. The company is also ramping up production in their new Gigafactory in Shanghai, which has an annual capacity of 450,000. So, the amount of deliveries for 2021 could double again. Also, the sales of the Model 3 have been steadily growing. In fact, it is currently the best-selling premium sedan in the world, selling more than the BMW 3 Series, Mercedes E-Class, Audi Q5 and Audi A6 in the last 6 months. Tesla is also building 2 new factories in Texas and Berlin, which are due to be completed and to start production in late 2021. The Berlin Gigafactory is expected to eventually increase production capacity by roughly 500,000, starting with the Model Y initially. The numbers for the Texas factory are still unknown, but it's expected that it will produce more Model Ys and the new Cybertruck when it's released. Tesla also has Model S and X, but they've had delays with starting the production of the new models in 2021, and so far this year no cars have been produced, whereas last year they managed to make 55,000. Despite the ongoing semiconductor shortage, the actual reason for the production delay is not lack of materials, but rather delays in finalizing the redesigning of the new models. Tesla has a production capacity of roughly 100 to 125,000 of these models per year, with Elon Musk saying that they will aim to produce around 2,000 a week, or even 2,500 if they get lucky. Okay, the production numbers are looking good, but what about the long-term strategy? Well, one of their top priorities is improving the driving range to make their cars more competitive against similar internal combustion engines vehicles. In fact, the top 4 electric cars with the longest drive ranges in 2021 are all Teslas, and Tesla only produced 4 models right now, so there you go. They are also continuing to improve their autopilot and full self-driving technology to enhance car safety. Also, in order to accelerate the widespread adoption of their products, Tesla are also adding more fast supercharger and destination charging stations, they're adding more vehicle service centers, and they're growing the mobile service fleet. Most importantly, they're aiming for a 50% annual increase of vehicle deliveries. That's a lot of cars. And something else to watch later this year is how the company handles the planned deliveries of the first Tesla semi-trucks and the Cybertrucks. Elon Musk has said that the company has a backup plan in the case that customers don't like the overly futuristic design of the Cybertrucks, so it's good to know that they are prepared for this. If you're enjoying the video so far, make sure you give it a thumbs up and subscribe to show some love, and also click the bell icon to get the latest videos. Now, let's look at solar. There is an increased demand for the solar roof, but overall delivery and deployment numbers are tiny. Their biggest deployment was in the latest quarter, but it was still just 92 megawatts. In comparison, First Solar shipped roughly 1.8 gigawatts, almost 20 times more. Tesla are currently working on improving the solar roof efficiency and installation capability, and it just seems like they're trying to get the product right before they start ramping up production and rolling it out on a massive scale, so I'll let them slide this time. Right now, the real focus is on production of energy storage, the Powerwall and the utility scale power packs. In 2020, they deployed roughly 3 gigawatt hours of energy storage products, which is actually a lot given that the total US energy storage was roughly around 23.2 gigawatt hours in 2020, although I'm not sure at what point in 2020 that was. Either way, they are a leader in energy storage and they seem to be ramping up production, although they aren't making any money on it yet. Their gross profit, not net, gross profit from the energy generation and storage business segment was only 18 million with almost 2 billion in sales. Regardless, their battery technology also benefits their car development and vice versa, so that's a nice way to create synergy between their products. Also, it's a good long-term strategy as batteries are only going to become more and more important. Why? Energy storage is essential for driving renewable energy. Now, when it comes to management and board members, I've got a few things to say. If you have a problem, if no one else can help, and if you can find them, maybe you can hire the Tesla team. Elon the Techno King, Kimball the Cowboy, Larry the Oracle founder, James the media mogul. Jokes aside though, Tesla's management is loaded. They've got all the A players. No pun intended. These are not the only impressive names on the board, but they are probably the most notorious ones. It's no wonder that everyone's been talking about Tesla when you take a look at who is actually running the company. Now, let's look at the numbers. In 2020, Tesla's revenue was $31.5 billion with a total net earnings of $690 million. Their annual earnings growth rate in the last 5 years was roughly 33.8%, and their revenue growth rate was around 48%, which is extremely high. And on top of that, it's forecasted to continue growing at the same pace for earnings, roughly 32%, and 25% for revenue. What can I say? I'm a simple man. I see numbers like that, I get excited about the stock. Now, Tesla's main market is the US, which accounts for roughly half of all of their revenue in 2020, followed by China with roughly 1/5. They haven't specified their other markets exactly, and they haven't divided them by regions, but it's obvious that their European segment is small, and that's unfortunate because Europe had a massive EV sales boom in 2020 with a 137% increase year on year and overtook China as the biggest EV market, although all the other markets are showing good signs of growth. Plus, it's likely that EV sales in the US will also take off over the next few years with the new government promoting EV adoption. So, in 2020, Tesla broke even for the first time and reported an EPS of 74 cents. Its gross profit margin hovers around 20%, although it was 21% in 2020, and the net profit margin was 2.1%. In comparison, rival car manufacturer Volkswagen had a 4.3% net margin. BMW had a 3.8% net margin, and Ford was actually losing money with a negative 1%. So we can see that Tesla wasn't the best, but it definitely could have done worse, especially given that 2020 was not a great year for the auto industry. However, in the latest quarterly earnings alone, Tesla reported a 1.1 billion non-GAAP earnings after adjusted for stock-based compensation, on a revenue of roughly 10.4 billion. So we can see that their earnings are actually starting to take off. The big question is this temporary or is it here to stay? And I guess we'll find out at the next earnings release. Okay, now let's look at some ratios. If we check the return on assets or ROA, Tesla seems to be doing better than its peers. Tesla's ROA stands at roughly 3.3%, whereas Volkswagen has 2.0%, BMW has 1.9%, Ford has 2.1%, and the industry average hovers around 2.7%. Now, Tesla's return on equity is lower, but that's because it has little debt. Its debt to equity ratio is only 38.6% as of the latest stats, which is tiny in the car business. In comparison, Volkswagen has around 158%, BMW has 167%, Ford has a staggering 449%. Remember, the more debt a company has, the harder it is to raise money, the more expensive it is to raise money, the harder it gets hit by rising interest rates, and the less resistant it is to any problems within the business. If we look at Tesla's cash reserves, which stand at 17.1 billion, while their long-term debt is roughly 9.5 to 10.5 billion, they start to look even better. They've essentially got enough assets to cover almost all of their liabilities, which, again, is very impressive for the auto industry. While its peers also have decent cash reserves, they are nowhere near enough to cover their liabilities. Essentially, Tesla is a much lighter and healthier company than its peers, and it has the option of raising additional cash without having to dilute its stock ownership. Also, Tesla own a decent amount of Bitcoin, and they've actually made a roughly $1 billion gain from it, so there's that. Some people joke that they've made more money from Bitcoin than they've made selling cars, and that is kind of true for now. Another thing to keep in mind about Tesla is its high stock-based compensation. The reason? Performance-based stock awards. Since 2020 was an important year for the company, both in terms of its performance and its stock price, stock-based compensation has literally soared to roughly 1.9 billion, or almost 3 times the actual net earnings of the company. Essentially, this depresses the GAAP earnings of the company and makes it appear less profitable on paper than it actually is. Stock-based compensation is not a cash expense, so it's common for analysts to add it back to the free cash flow and earnings, which gives us the non-GAAP figure, which in this case would be almost $2.5 billion. Now, that's much nicer than 690 million, isn't it? Then, what is the ownership structure? Well, the majority of Tesla is held either by insiders, roughly 20%, or by the public, roughly 32%. Meaning that less than half of it is owned by institutions. That's good as, first of all, it helps liquidity, but it also means that there is a good opportunity for the stock to appreciate even more in the long term. It also means that institutions have less of a say in how Tesla is run, which is good as institutional managers tend to damage innovation and stifle creativity, and this is pretty much what Tesla is all about. Okay, so far so good. Tesla is looking amazing. The company has great prospects, and it's really hard to argue otherwise. However, what's the price tag? And here we run into a bit of a problem. Tesla's PE ratio is roughly 230, with a forward PE of about 110, so immediately we can tell that the company is very pricey. Compared to its competitors, the difference becomes even more obvious. Volkswagen has a PE of 9.75 and a forward PE of 7.5. BMW's PE is roughly 7.25 with roughly the same forward PE, and Ford has a PE of roughly 7.66 with a forward PE of 6.94. So, we can see that Tesla is simply priced very high. But why? Obviously, Tesla is a growth company unlike its peers, which is why the valuation is so high, and it does have a lot of potential, so you could argue that the price is somewhat justified, but at this point, it is simply too high to make it a reasonable purchase, even with all the growth in mind. Although I like the company and it's techno king, I just cannot bring myself to buy it at this price. I would be much happier buying Volkswagen or BMW simply because they are also operating in the same industry and they are doing well, but they also have a decent price. Also, with the current market conditions, I wouldn't be surprised if Tesla drops to 500 or even lower. I mean, investors expect a lot from it. If the company has even a single bad quarter, the price could plummet. Long term, the company will probably turn out to be one of the best investment you can ever make, but I wouldn't put my money into it now. Or, at least, I wouldn't put too much. I think it's best to approach it with caution. Dollar cost averaging can really be your friend here. Me, I'll probably wait until the next earnings report, then I'll make up my mind. Okay, this was my analysis on Tesla. It's an amazing company really, it's exciting, it's fresh, it's interesting just reading about it. Let me know what you think about Tesla in the comments below. Also, check out my analysis on Alibaba, another company that has amazing long-term potential. If you enjoyed this video, like, share, subscribe. Thanks for watching and I'll see you in the next video.